Hey guys! Last night I did the first Fintech Book Club live event, which was interviewing Ahmed Siddiqui, the author of Anatomy of the Swipe. And we had a bunch of people tune in. We did get to take questions from the audience. If you weren't able to make it, I recorded it. So I'm going to post the recording right after this. I was really excited to be able to talk to Ahmed. We basically have very similar missions. It's just he wrote a book and I started a book club, but we're kind of getting at the same thing, which is given that there's a whole bunch of people in tech who want to work in fintech, and there's a lot of enthusiasm around that, and there's not that many materials about how to do so. How can we facilitate the transition and have more smart, ambitious tech people working to create products in the fintech universe? We also talked about how Ahmed crossed the transom from the startup world to the publishing world. Ahmed gives a specific recommendation for a program that he used to write the book and how he's publishing it and using Amazon's print on demand to really easily manage the inventory. We dig into some of the nitty-gritty details around payment systems, and we talk about what international fintech products Ahmed wishes we had in the US. So, hope you enjoy. So I just want to start out by introducing you to the book club, though I think people know who you are. But everyone, this is Ahmed Siddiqui. He is the VP of Product at Branch and was previously the VP of Product at Marketa, payments technology unicorn valued at over $4.3 billion. And when he's not making stick-figure drawings to grasp the concepts of card-based payments, he's building the next wave of fintech startups. So welcome to this fireside chat. And I have a couple questions for you. So my first question is, I know a lot of product people, know a lot of experts, but most of them have not written a book. So I'm curious, how did Anatomy of a Swipe come to be?
Yeah, well, Maya, again, thanks again for having me here. And again, I'm super stoked to be part of this group. So thank you all for welcoming me to the group. I think the way that I always tell people is that the Anatomy of the Swipe actually is a compilation of a lot of Confluence articles. And so like product people are in general are like really good at writing Confluence, right? So I feel like it's actually not that hard. It was just like, taking those articles and then converting them into a story form. I think that's what probably was the bulk of my time spent doing that because so I had payments experience. I learned about payments through Marketa. And then when I went to Branch, we actually were not a payments company or a fintech company for that matter. And so I needed to kind of like do a lot of education to kind of help the team members like understand, this is how the card rails work, and this is how ACH works, et cetera. And so I was writing a lot there. And then I said, well, why don't I just kind of compile this into a book? There's this one thing that for this audience, if you are interested in writing a book, look up the Creators Institute. And so it's an online program. It's kind of like it's a 6-month program for helping you write a book. And that's what I went through. It's headed up by this guy. His name is Eric Koester. He's another Silicon Valley entrepreneur that I got to know when I was in the Bay Area, and he now teaches at Georgetown. Actually, it's an undergrad level course on how to write a book. And so what he did is he took that class and he converted it into something that can be done online. And this is even pre-COVID that he kind of put this out there and said, professionals who want to write a book. So he reached out and he's like, hey, it's been a while since we last chatted, but do you have anything you want to write about? And I thought about it for a while. I was like, oh shit, I'm doing all this writing anyways. Might as well figure out how to put it into book. I've always had it as like a thing that I wanted to do. It's like a bucket list item anyways. So sure. It all kind of just worked.
Got it. So Eric kind of helped transition you from just the tech world to the publishing world.
Absolutely.
That's cool. Were there any, what is it like in publishing? Was there any surprises? Is it similar to the tech world or is it pretty different?
So there's, what's cool about publishing is that there's 2 models. And so one model is where it's like you have a publisher, but it's almost like you self-publish in a way. And what happens there is that you essentially pay the publisher up front, and then you get most of the royalties, right? And essentially, well, that's the model that I went with. The other model is you find the publisher and they basically put up all the money up front, and then they give you a little part of the royalty. And they basically take care of a lot more of the marketing. So in the model that I chose, I actually needed to do a lot more of the marketing myself. And there is a bit more work, I guess, in that, but I kind of liked it because it's, I mean, it's my first book, right? So I wanted to do the learning.
Got it. Okay. Yeah, I think I was more familiar with the other type where like they put up the money up front and they do more of the marketing, you give you the royalties. It feels like you have maybe more ownership with this model.
Yeah, there's more ownership here. And so that's why it's interesting, because I don't think that this model really would be possible had it not been for tech. And a lot of it is, it's really cool because Amazon actually doesn't store any inventory. They literally are printing on the fly. So they have it set up where it's like, they call it print on demand. And so when somebody goes and clicks buy on Amazon, they literally are going to print it and then ship it out. Like they don't store it, which is really neat.
And I mean, that's really cool. And it's, our next book, PayPal Wars, is out of print. So we're having all kinds of trouble.
Yeah, sorry for recommending that one. I didn't realize it was out of print.
We're figuring it out. But that's cool. I mean, I had no idea that yours is print on demand, because with book club, we all bought a bunch of copies. They came really quickly. There were no delays. It felt like a really seamless process. Yeah.
No, I mean, obviously Kindle is awesome. I mean, that's instant, but for the physical book, yeah, they don't keep any inventory, which is really neat.
And that's what I've been telling everyone. So by the way, if you have not purchased your copy of Anatomy of the Swipe yet, go ahead and get it on Amazon. Anatomy of the Swipe by Ahmed Siddiqui. Apparently they will print it after you order it and mail it to you, which is wild to me. But hey,
oh, cool.
I know tech. Well, speaking of tech, you're pretty techie. So I was stalking your LinkedIn profile, and I noticed you have a background in data architecture, which is a pretty technical background. Do you think having that background helped you understand the technical underpinnings of the different financial systems that you describe in the book?
Yes and no, I guess. I think it's, I like to kind of describe myself as curious. And so when I think about that, it's like, I just like learning about things. And I think that was the main skill. So I started off my career at IBM and did a lot of work in just like very large financial, like data architecture, data warehouses, et cetera. So I do have a lot of background in finance in general. And so finance, accounts receivable, general ledger, all that sort of stuff. I've got basically a finance degree from that perspective. And so I have that plus how to build a data architecture. And that helped me a lot, especially at Marketa, because we had to build essentially everything from scratch. And so that helped me understand. And a lot of folks don't really understand the two-sided accounting system, right? So it's like, there's a debit and then there's a credit. What? Like it's hard for a lot of people to understand. So it was good that I was able to grasp that. And then a lot of times it was taking that basic information and then bringing it down to the engineers that I think was helpful, and being able to explain how do you model it correctly. So yeah, I mean, it definitely, I think it helped, but I think it's a combo of a lot of things.
Right. Sounds like you're naturally a curious person, and also that you've been passionate about payments for a really long time. I mean, it sounds like you've been doing this forever. Do you know what was the spark for that?
So I'm actually new to payments. So I will tell, there's probably a lot more people that have a lot more experience than I do on this call. So I definitely have to preface that. So I stumbled into payments, and I talk about this kind of in the first part of the book, but my my high school friend got me into payments. And so we had not talked since high school graduation. He reached out on Facebook and was like, "Hey, dude, what are you doing?" I'm in the San Francisco, you're in San Francisco. We probably should get together for coffee. I was like, yeah, let's do that. And as it turns out, he was head of product over at Marketa. And I was like, I don't even know what the hell this is. Like, is it kind of like Stripe, I guess? I don't know. And he's like, yeah, would you be interested in joining? And I ended up just kind of taking a blind leap of faith and joined him. And that's how I learned payments. It was learning payments the hard way. I was employee 35 at Marketa. So we literally were all just in the trenches trying to figure out how the heck this stuff works. And that's how I learned it.
It's interesting. So I'm on the outside, but the way that I kind of have looked at the last couple of years of your career is basically that you studied it really deeply. You became an expert in the space, and then you took what you knew about the way the system works and found a really interesting opportunity to provide consumer value, which is the stuff that you're doing at Branch. So yeah, I'm curious, like, would you agree with that portrayal? And can you tell us more about what you're building at Branch?
Yeah, no, I'll give you the backstory on Branch. Is really that when I joined Branch about 2 years ago. So the story on this one is that my wife and I, we were expecting our third kid. And I'm originally from Minnesota. And I was out in the Bay Area for almost like 10 years. And so we were trying to figure out a way to get back to Minnesota. And so every time that I would like come to visit my parents and stuff over Thanksgiving and whatnot, I would just like go and talk to various founders. And so I met Atif, the CEO, I think during one of those Thanksgiving trips. And what was interesting is that the company was about scheduling and shift management, and also, but the underlying premise was, how do we help these hourly workers or working Americans actually make more money? So that they get kind of out of this, just the day to day of like living paycheck to paycheck, right? And as it turned out, we were trying to figure out how do they pick up more shifts at, let's say, a Target or a Subway or Domino's Pizza for that matter, and how can they make more money by taking more shifts, right? And so we were doing that, and I actually really liked the mission of this company, just because, again, it's a real problem. Like, I've worked hourly jobs before. I understand that, situation. A lot of people are just like, they're single parents or, whatever, but they're trying to make do, right? And so, I mean, and you know this very well, right, Maya? And so really excited about the mission. And then what happened is that we found out that a lot of times they were running low on cash in between paychecks. And so we were trying to figure out, how do we like help them get a little bit of earned wages before they get their next paycheck. Most people get paid 15th and the 30th, right? And so as I was leaving Marketa, we were actually doing a lot of work in the space of push to card, or sometimes it's referred to OCT or Visa Direct or MasterCard Send. And so we were looking into it, as kind of an issuer processor or as a program manager. Like, when you're thinking about Rails, you're kind of like, yeah, this technology is cool and all, but like, how does it get applied? I couldn't figure that out when I was at Marketa. And then when I left, we're like, oh shit, this is like perfect use case. And so what we did is we started offering, we just tried it, like we, tried offering, just like $50 as an advance based off of how many hours that they worked, right? And that business just like kind of blew up. And it was really exciting to watch, because like it was one of these overnight things that we didn't really think was going to be the main part of the business. We're like, oh, okay, maybe it would be like kind of a cool little add-on to our scheduling business, but that's what really took over. And so what was really cool is that I was learning about that. I didn't really even know too much about it, but I was learning about it when I was, working in payments. And then, we applied it. It worked awesome. And then later on, we, got into more of the financial services segment, where, we found out that a lot of people were taking money to pay the bank fees at, Wells or Bank of America or whatever, that, because they weren't maintaining a minimum balance. And then there's the overdraft fees. So we're like, well, shit, like we could do something for that too, you know? So that's why we're kind of now offering the traditional like challenger bank product offering as well to this segment.
Got it. Yeah, that makes a ton of sense. One of the trends that I've been watching is that people are getting paid faster and faster, right? It's like Uber pays people like 7 times per day. I think McDonald's is now paying many of their customers daily. Have you guys looked at the expense side of the equation at all? That was always something that we were interested in at Pinch, right? My background, we were doing rent payments to the credit bureaus. And so rent is such a large part of such a large expense for people. It's often like 30% of their monthly income or more. Have you looked at that side at all? And if there's any opportunity there?
So we definitely are talking to our users about that. It is a huge expense, and it's not. Let me characterize it. Whenever I think of expense, I think about reimbursables. So I don't know if I want to confuse those two things, but just in general, things that people spend money on. Yes, rent is probably one of the biggest ones. I feel like it's still really clunky and antiquated in many cases. And I thought that, maybe there's better ways of doing it, but I feel like bill pay in general, like it still kind of sucks. In
Bill pay
most,
sucks. Yeah.
and I think there's a lot of room there to give some love to that area and be able to make it move faster, because it's like, well, it's annoying for the payers to pay, right? And then even for the payee to receive the money, a lot of times it's paper check. I mean, you got to go somewhere, or you got to at least take the picture of it and then deposit it. And then it doesn't, it's not there in real time. So it might take a day or two before it actually gets settled, right?
Yeah.
There's just got to be better ways of doing it. And I think that there are some pretty interesting startups that are getting into that space. There's one I just spoke with. I think it's pretty clever. It's called Get Flex. I don't know if you've seen these guys, but
Oh, they're doing rent payments specifically, right?
yeah. So what's really cool about them is that you basically say, all right, I need to pay this person, and then usually I have to pay on this date. And what they do is they just split it into 4 payments, and then you just pay a Get Flex. And then they take care of all the rest. They're just like, okay, if we need to cut a check, we'll figure it out. If we need to pay an ACH, we'll do that. If we pay with card, whatever, like they'll figure it out. But that's pretty neat, because like it's solving a real pain point. Number one, in that rent is more than 30% of your earnings. And so they kind of like split it up for you to make it a little bit more manageable. But then the other thing is the mechanics of moving money, they've kind of taken care of, which I think is pretty awesome. So
right. It seems crazy that we make consumers like figure out the detail of, are they typing in a debit card number, or are they typing in a routing and account number, and what is the different experience that they're going to have depending on which of those they choose.
Absolutely. It needs to be disrupted. Let's just put it that way.
Well, I've heard you say that every major tech company is going to be a payments company. Can you tell me more what you're thinking behind that? I assume that's related to this conversation.
Yeah, I mean, I feel like at some point people are going to figure out that they need to do something with payments, right? So it's like our payments or commerce or however you want to call it, like they're going to need something, be it that they need to be able to accept payments via a credit card or ACH or, God forbid, check, or you need a way to send payments. So that's kind of the main way of making money, right? Like one of the business that I think about is like ad businesses, right? Like they're making money from the advertisers, but somebody's got to pay for that. So you still need a fintech component, right? Or you look at marketplaces where it's like, either you're buying something or you're selling something, or if it's a two-sided marketplace, right? You got to figure out, like Airbnb, for example, is the best example of this. Like you've got renters that, need to pay. So they collect money through their credit card or debit card, and then you need to pay out the host. And what's fascinating about this is that Airbnb, being as global as it is, like they have to figure out how to do this in all these different countries and all different types. So it's like maybe card works great in the US, but it doesn't work great in China, right?
Right.
And so they have to figure all that out. And so, and how does settlement work? What all do you need to put in there? And so there's just a lot there. And I feel like some of the best innovations have come through figuring out how to make payments seamless, right? It's like even getting into a cab and having to worry about like giving cash to the cabbie. Like you don't have that problem anymore with Uber, right? It's just
That was
like,
horrible.
just get out and it's paid and it's done, you know?
Well, and even, I mean, some of what you're saying, it feels so obvious. Like businesses are about exchanging value, and payments is the primary way we exchange value. So, of course, every business is going to be a payments company. But I'm curious, like, what is it about this point in time and this point in history that is really creating all this enthusiasm and making that true?
I think it's a lot more accessible now, right? And I think a lot of it is kind of, you know, I would say it's been made really easy. That probably the pioneer really is PayPal, right? Just being able to kind of get that out there, and then followed by, you know, the Stripes and you know, all the other guys out there that are trying to make payments accessible. It's the notion of being able to have things in the cloud and being able to have APIs on top of everything so that you can kind of build it into your experience. Because historically, I mean, I can speak more towards the issuing side than I can on, you know, acquiring, but because that's where most of my experience is that you couldn't issue your own card very easily before Marketa came in and actually made it very simple and straightforward and created APIs for it, right? And now it feels like a lot more people are doing it that way. And then there's all these like banking as a service platforms now that have like packaged all of this stuff together. So you know, when you look at say Galileo, Marketa, you've got another banking as a service provider is Bond, you've got Camber, Synapse. So all these guys are just making it really easy to stand up things on the issuing side. And then on the acquiring side, I mean, Stripe has just made it super easy. It's like 3 lines of code and poof, you can accept payments, you know, like it's amazing.
Yeah, sometimes I feel like a lot of what we're doing is kind of dragging the financial incumbents into the future. Marketa is, right, we have to credit them for a lot of this and Stripe for a lot of this, but sort of like helping them modernize and adding APIs and adding things like that. And then personally, I'm also really excited about some of the infrastructure startups that help with things like KYC and AML monitoring and all that. And I really view them as helping bridge the gap between like the underlying banks and the other incumbent players, and these new startups that have all these ideas about how to provide customer value or how to make things faster or how to make things cheaper. It's like the infrastructure startups, they just have a special place in my heart for bridging that gap and making the banks more comfortable.
Well, yeah, no, I mean, actually, you're absolutely right with the whole making the banks comfortable because they're not. It's I'd love to say that they're like super comfortable with all the change. It's it's work, and I think the infrastructure guys have like made it a lot simpler to understand, and the sort of new economy that's getting built out based on, you know, having payments being so fluid and easy. I think everybody's realizing that shit, we got to do something about this, right?
It's time to move.
Time to move.
Yeah. Shifting tax a little bit. So I love the book. I learned a ton. Even right, we're talking about OCT transactions, and I work a lot with OCT transactions. I even knew it stood for original credit transaction, but I didn't connect the dots that it's like, oh, the reason it's called an original credit transaction is because it's like a merchant refund or merchant credit where there wasn't an initial purchase. Like I had never figured that out, and I'm like, got it. This explains so much about how those pieces are structured. There are some places that I wish you had gone deeper in the book. Like I'm curious about authorizations and how those work on a really nitty gritty level. And there were also some pieces that I was surprised to see in the book, like things that weren't card payments and ACH payments. So I'm curious, when you were coming up with the content, I imagine that you had like an ideal reader in mind. And who were you designing the book for?
So I think kind of going back to where I originally started again, it's typically non-payments people that kind of got put into payments and fintech, I guess. That's kind of the best. It's the weird way of describing it, but like at least over at Branch, like you know, a lot of the sort of original crew, like we didn't really know anything about payments and fintech, and so trying to give them the broadest like breadth of like what's all going on in this space is kind of what I really wanted to accomplish. But then I also, as I was writing the book, I mean, there's plenty of entrepreneurs that are trying to get into this space or trying to understand it a little bit more, or you know, they're just like they're in a job where you know they're doing something and then all of a sudden you know their manager landed on their plate like, well, we need you to figure out this payments thing, you know, like how do we do commerce? And they're just like, oh my god, I don't know where to go. Because you know, the first book that we had in the book club, the payment systems in the US, is kind of the Bible, right? Like that's the one that everybody get. I mean, when I started at Marketa, everybody got that book. It was just like, boom, this is the first book that you read. But I think the challenge that I had with it is I'm very visual. Like I need pictures and I need story and that kind of thing. I couldn't get that from that book, unfortunately. And like, it was hard for me to go through that book. And so I was like, well, I'm hoping that I can do something a little bit better, you know, just in terms of being able to explain. I still feel that it's the Bible, right? But I feel like maybe if I can make mine be the Cliff Notes, I'll be happy, you know?
Yeah, I think, well, and even in the fintech universe, there's so much enthusiasm around debit cards and card payments specifically. And so I think having your book, which goes deep in that area, is really, really exciting for a lot of people. I loved the cartoons. It actually reminds me, like my background is in software engineering and network engineering. And then so it reminds me of like when people draw the TCP messages and like
Yeah.
sending the accents, like all of that. I'm like, wait, this is very similar to how the card transaction infrastructure works. And I liked how each, like the acquirer would get the message and then like would have this happy face and would be like, okay, sounds good, I'll approve the transaction.
It literally is like switches, you know, you're just like going from here to there or whatever. It's really funny that that's exactly what it is. It is truly TCP IP. I think you
Yeah.
nailed it. Like but there's a multiple hops there, right? Well, actually it is exactly like TCP IP. I'm going to use that now. Thank you.
I think card transactions, are very similar to TCP. And even I've tried to make the analogy that single message debit card transactions are like UDP,
Yeah.
sort of,
Yeah.
right?
Yeah.
Right?
Yeah. I love that. All right. You need to write the book about that. How
There's,
payment transactions are like TCP IP.
I know, well, really, there isn't the only two things that I know about in life. So I'm trying to connect them.
That's awesome.
So, I just have one last question for you before I want to open it up to the group a little bit. And so, crew, if you guys have questions, you can go ahead. You can either type them into the chat and we'll discuss them, or if you want to ask them live, just say next and I'll let you know when to come off mute and ask your question. But Ahmed, my last question for you is, what do you think is the most promising area of fintech today, right? Like you've talked about, a lot of entrepreneurs are reading your book. My guess is that they see all this like exciting new capability brought online by bank as a service providers. They want to get in, they want to provide customer value, they want to like use technology to do so. I mean, what are you excited about? How do you see things evolving, or what do you most wish was built?
That's a lot of stuff, but I'm going to try to answer. So I have to say this because everybody is going to ask, what about crypto? And like, I'm not going to talk about crypto because I actually don't even fully understand it. So if there's anybody else that can explain it to me, then let's talk. But I think what's really exciting is that technology is being used to make great experiences for people. And I think fintech is one of those areas that from the outside, when you look at it, it's kind of like, all right, cool, you're moving money around or whatever. But I think there is real value to be created on actually helping people. And I think we can do that by actually leveraging some of the new technologies. And I think especially with COVID, like I think it's getting rid of paper, getting rid of essentially things that you need to make contact with, has really accelerated, like being able to solve for that, right? So I definitely think that there's going to be a huge spike in just contactless payments. So be it Apple Pay, Google Pay in the States, or in Asia, it's Alipay, or other forms of moving money that are not requiring you to touch the physical paper. I I hope we can kill off checks. Like, I'm sorry if there's anybody here that's in the checks business, but I hate them. Like, so I think that it's time now to move on and get digital. I think there's a lot of opportunity there. But then also what we were talking about earlier, just bill pay in general there's got to be something better. Like, that's the one thing I wish is just like, why can't this be better? And you think that ACH is actually the solve for it, but it actually isn't. And so
say more about that.
I think the majority of payments actually moves through ACH, right? So when you look at direct deposit and everything, the issue with ACH is that you don't know anything about the other side. So if you're sending money, you're kind of crossing your fingers that the account exists, right? Or if you're trying to pull money from them, you're hoping that they have enough money in their bank account. Now, I mean, there's ways to do it, right? I mean, you can use Plaid, for example, to like check people's balance and whatever and like pull, but still the money doesn't ever move in real time. Even though they say, oh, same day ACH and whatnot, the fastest that you're going to get is if you initiate in the morning, you might get the money at the end of the night, right? And that's considered same day ACH, which is the fastest. And even then, there's all these issues of like they may or may not have money at the time that you decided to pull. Right. So I think fundamentally that's it is what it is. I mean, that's something we have to deal with. But when you look at card-based transactions, I do feel like there's something special that the networks have built there in that you literally can swipe somebody's debit card and get a decline response instantly. Right. Like, if they don't have the money, you just get a decline and you move on, right? You just say, oh, sorry, like I can't let you buy this thing from me, or I can't like send you money or whatever. Like it's easy. Like, people have their card on them now. Everything that when it's tokenized, it makes things really easy, right? Like, you can move money super fast with Apple Pay.
Can we get into the details there of cards versus ACH? Because so one of the things that I've thought is that ACH, bunch of reasons why it's slow, right? It's like the Fed only processes files 4 times a day. Your bank processes files, I don't know, maybe also on a batch system. But I have thought that one of the reasons why ACH took a long time was because, right, banks are holding it in case it gets clawed back. Does that similar dynamic exist for, right, debit cards? And like speeding up transactions is not all good, right?
Yeah, I think so the way you need to think about it is this. On cards, you can always have a chargeback, right? You have that window of getting a chargeback, but also at the same time, that when you tried to pull money from that person, they had money there. Either they have it on their debit card, so therefore it's in their account, or it's on a credit card where they've got a credit line where you can pull from, right? Now, the thing is that, sure, like, cards get stolen, and especially during Christmas time, you might see a transaction that you're like, this is not mine, and you initiate the chargeback, and then it's between the merchant and the issuer that they need to figure that out, right? But on ACH, the biggest problem is you have a 3-day window when somebody can do a return. And so when you initiate an ACH, like if you initiate the ACH right now and it's set for the following day, it's going to hit the person's account the next morning. Let's just say like 6 a.m. or whatever, right? And it's very possible that when you initiated it, they may have had money, but then they spent it throughout the day. And then in the morning, you find out when the ACH comes to try to grab it, they don't have any money. It creates an overdraft in their bank account, which, depending on their issuing bank, they may have an overdraft fee, they might not. you know? And then what happens is that the bank then initiates, they'll charge, if they have an overdraft charge, they're going to charge the user regardless of which is horrible, by the way. But then what they do is they take it and then they return it, right? So it comes back to, the originator of that ACH. Well, some banks decide to like sit on it for a little bit. Some banks return it right away, right? And so for 3 days, that's why a lot of times if you're doing like an account funding, you won't see that money in your account if you're transferring it from another bank for like 3 days, is because the bank basically, your bank is sitting on it just to wait to hear that it doesn't get a return. Which is
so much of cards being better is this like super fast authorization system.
Like it's actually it's like the anticipation kind of kills you, all right? It's like, oh my God, like somebody might return it, but at least with the card, that, hey, it's stuff, the money's gone,
Right. Yeah, I also, and I'm with you in hoping that COVID brings about like a big step change, particularly in consumer behavior. Just a small anecdote, my mom, who is my mom, right? Like I am like a fintech nerd and I have been trying to bring her up to speed, get her on Apple Pay and all that stuff for years, right? I added all of her cards to her Apple Pay. So I was like, it's so easy. It's all set up for you. You're all ready to go. And she never did it until COVID, right? When she got scared of touching things. And now she uses Apple Pay all the time. And she said, well, she lives in this like very remote part of Washington State. And she went, 10 miles down the road to her like local gas station. And she said that she paid with her watch, her Apple Watch, and it drew a crowd of people around her and everyone wanted her to buy more things to see how it worked. And she said, it's so fast. You don't even have to take your wallet out of your pocket. She said, I'm never going back. And so I think, right, I mean, that's just obviously one story of my mother, but it's at least one person who's like now doing things totally different, probably forever because of COVID. And so I'm optimistic.
Yeah, no, I mean, actually, my mom's the same. She doesn't have an Apple Watch, but it was a very similar situation. And I remember adding her Wells, card to her wallet, and now she uses it all the time, which is really cool.
It's great. Cool. Okay. Well, like I said, okay, so I was like, that's the only question I have. It ended up being a long question. We do have some questions in the chat that I wanted to ask you from broader group. So the first one is from David, and he's curious if there's like an area where we actually need like increased regulation or increased laws, basically like modernizing them given like the way that consumers are today and the technology that we have today.
Yeah, I mean, it's almost kind of like the laws when they were written were so vague that, there's so much time spent on figuring out how to interpret it. So I think there's probably a lot of room there to figure out like, all right, these laws were written for a specific time period and they maybe meant this. How does it apply in sort of the modern world? I think we run into this all the time. I mean, I can't really talk too much about exact like scenarios, but I think there's a lot of time wasted in fintech and just interpreting.
Oh, interesting. So like that the regulations aren't more specific. People are left kind of like grasping at straws and like floundering, trying to figure out like exactly how they apply given the way the technology works today.
And that's exactly it. And so then you have like all the lawyers trying to like, figure out how this works. And then we have to bring it outside counsel. And then it just takes so much time just in that.
And it's wildly expensive.
Oh, it's very expensive.
Okay, next question is from Ben. He asks, will building fintech ever be as easy as other kinds of consumer and enterprise tech? And how much easier do you think it will get with fintech infrastructure like Alloy and Plaid and Move?
Yeah. Oh, by the way, I'm super excited about Move. So that one it's very.
Yeah, we're all big Move fan club for sure.
Yeah. No, we should totally form the fan club on that. But anyways, I think what it is that I think now people are actually taking things that were kind of I would say nobody talked about it, and now they're basically making it easier. to use. Ledgers, for example, like ledger concept has been around forever, but it's now just being able to be more modernized, so that people can use APIs to call it and get balances and be able to post to it and that kind of thing. And so I think there's a lot of excitement in there. And I think Move is the one that's actually driving a lot of that, which is really cool. I think just things in general are getting easier. Building websites, building mobile apps, kind of were a thing. And then now being able to inject fintech or payments into that, it's just getting easier and easier. So, I mean, I think this is a really good time to do something in fintech because you can iterate and test and try and do something. And, what's really funny is that, like, if you're willing to put the energy into doing something and trying, you probably will be successful at something. And you might say, oh, okay, I'm starting something and this is what I want to build. But at the end of the day, you might end up building something completely different because you found a hole in fintech that you were able to kind of fill.
That's exciting. I mean, not every industry is like that. So I feel like that's a really special time.
It's a really special time because, again, there's still a lot of issues in fintech. So I think there's a lot of problems that you can solve, but kind of the core is there, right? I mean, if you want a ledger, you can get it from Move. You want to do issuing processing, you can do it on Marketa or Galileo or any of these guys. If you want to accept payments, you use Stripe or Finex or any of these guys, right? So there's a lot of options.
Yeah, and it's even it's been a long time since I built something, but I created this extremely ugly website, fintechbookclub.com, to facilitate things like this. And I was shocked at how easy it was. And not only easy to make a website, but it's also free. The entire system is free. So I have to pay like $12 a year for the domain name. And everything else is free. All the hosting is free. The HTTPS is free. Whatever thing takes my form inputs and does it to that. My tiny newsletter subscription is free. My Discord is free. It's all free. My Zoom is paid for by Chime, which I really appreciate. But I've just been impressed at how accessible it is to bring things to life in the world compared to even 10 years ago.
Yeah, I think the only call out here is that with fintech, when you're dealing with money, you might not be able to get away with things that are always free, right? So it's kind of like, I always like using Twilio as an example. It's like Twilio is so damn easy to use. And all you do is you put your credit card in and it's basically use it as you use it, right? But and similarly with payment acceptance, it's that way. But when you're talking about creating a card or something like that, there's not a lot of free options there that you can kind of test and try and get something into market for free and then get going with it. I think there are companies out there that are trying something, but I think fundamentally when you're moving money and you have to deal with banks and that kind of thing, there's still costs involved, but it's not atrocious. It's not hundreds of thousands of dollars, which is what it used to be like.
Right. And I don't need it to be free, but actually one of the things I'm curious about is for founders, there's often kind of a chicken and the egg problem where a lot of the banks won't work with them unless they have 100,000 customers or they're backed by one of the big VC firms or they have $10 million in funding. And I think the entrepreneurs are like, hey, I could go get that stuff, but I need you first because I have to build my product on you. Do you have any advice for people in that position?
Yeah, that's a really hard one. I mean, and a lot of times when the vendors too are kind of checking you out on that too. So it's not just the bank. If you're trying to accepting payments is easy, right? There's so many ways that you can accept payments. You might be paying a lot of money for it initially, and then you can scale down. So that's easy. But on the other side of the equation on issuing, yeah, you do need to have something because the banks basically are kind of well, we don't want to deal with just anybody, right? I mean, just some Joe Schmo, that just wants their own card or something like that. But I would say that both with actually really excited about Stripe issuing too, by the way. So, what you can do is both with Marketa issuing and with Stripe issuing, you can actually build your entire program and you can test it on a sandbox.
Cool.
You won't be able to like maybe create a physical plastic, but you can still do stuff with virtual cards, right? And so you can actually do an entire POC without really going through all that rigmarole. Now, once you actually decide to go into production, that's really where you need that. So,
right. Well, but that is cool that you can build. It's like you can at least build the features. You can build a proof of concept. You can maybe do user testing or get it in front of VCs without actually moving money and requiring as much.
Absolutely.
Right? Okay, another question from the chat we have. So Lakesh asks about Marketa and asks how Marketa arrived at the brilliant system design and architecture for its processing platform and what was the journey like there?
Yeah, no, I appreciate that. So, so I joined Marketa probably like 4 years after Jason really founded it. And so Jason Gardner actually had this idea where he was like, I have all these like Groupons in my wallet, or I've got all these like gift cards and I hate having to have them. Couldn't I just put them on one piece of plastic and just swipe it at the terminal? Because at the merchant side, the problem is that they only have limited real estate where they go to check out. So you have room for maybe like, maybe a Square register or something, and then maybe a few other things, but you can't keep adding more and more things like, oh, I've got this terminal for my like rewards program, and I've got this DoorDash terminal, and I've got all these food ordering ones and like whatever. So they don't have all of that real estate to be able to have that. And it's really confusing for the cashier to know, like, how do you check out based on these different methods? But everybody knows how to use a card terminal, right? It's just, you slide the plastic, it, says it's approved or declined, and then the money comes the next day, right? So he was like, well, we already know that infrastructure already exists at the merchant, but how can we do it so that it's drawing down from one part of my card balance and not the other? So like, for example, he was like, okay, if I've got $100 at the sushi restaurant and I've got $100 at this grocery store and I go and swipe this at the sushi restaurant, how do I know that the $100 is coming out of the sushi budget, right? And so he was looking into this and he's like, well, he went to the big processors. They were like, we can't do this. Some of them, they came back and they're like, yeah, it's going to be hundreds of thousands of dollars and, 2 years of work for us to like actually do this. And so he was like, well, okay, fine. Then let me try to build this. And so he was lucky to actually pitch this in front of Discover. And Discover was kind of the first, card network that essentially was like kind of interested in this. And he ended up building issuing processing from scratch without really realizing that he was building issuing processing. So, wow. And a vast majority of, sort of the early guys at Marketa were gamers. They were like game designers, a lot of them worked for IGN. And so it was kind of like, not a lot of people actually had experience working in issuing processing. There's still a very few people, by the way, that really understand this stuff. And a vast majority of them come from these different processors. And kind of like, all right, got a piece of hardware, installed it in a data center, and then connected directly to the network using kind of the ISO 8583 protocol that I talked a little bit about in the book, and like built this thing for basically being able to build this like multi-purse card, right? And again, he built it on the cloud, which was pretty new at the time because everybody else, all issuer processors at the time were kind of built on, legacy hardware. And so it kind of did that. I mean, obviously he brought in a lot of really great technical folks. So Tony Ford, the CTO, he was able to kind of take the concepts of Twilio and be able to bring that to stream processing, opened up the API, et cetera. And so that was completely new. I mean, nobody had ever done that before, but it was born out of a need that we had to do kind of from scratch, and found out later that it was a lot more valuable as an issuing processing platform than actually as a rewards card, for that matter.
That's so cool. I mean, it's a common startup story, right? Like that someone builds a cool startup idea, and on the way to do that, they had built some infrastructure to enable that. And it turns out that infrastructure is so much more valuable, and they can sell that to many more people.
Yeah, absolutely. It was an amazing ride. I mean, I remember joining right around the time that we were just like still playing around with this multi-card thing. And then later we're just like, no, it's actually better to service other people as a platform. So that's how we got going.
Interesting. Quick question about the cloud. Did you get any pushback from your banking partners or regulators about being such early adopters of the cloud? I know at Pinch, we had to have like a visitor log, and we had to have security cameras, and they were so worried about our Wi-Fi network and all of these different things at our office. When we were like, look, we don't have to worry about the physical security of our office because all of our data is in the cloud. It's not in these filing cabinets. And I remember we had to buy a locking filing cabinet to show the credit bureau inspectors that we had a locking file cabinet, even though it was empty, because all of our data was stored in the cloud. Can you talk about that a little bit?
Yeah, it's so funny you mentioned that. Yeah, I mean, definitely security is, there are certain things that, banks and the networks actually have put in that are good. Things like they have rules on shredding, right? So it's like, okay, you should not have physical cards laying around. You should always, either lock them up in a safe, or you should shred them right away. And so those are really good rules and they're effectively to protect consumers, right? So I think the spirit of what they're trying to accomplish is good, but again, goes back to kind of this interpretation conversation. And so you need people that really good compliance people and really good legal folks that really understand how to interpret that and apply it. And some of it requires you gotta convince the banks that, hey, this is a little bit new and different. And yeah, being out in the cloud definitely was new to them. They're like, well, we want to do an audit of your data center. Well, how do you do an audit of AWS? So getting them around that was kind of interesting.
Another question from the chat is about your favorite international fintech product that's not available here in the US, given that you've spent time in the Middle East. What do you wish was here?
I still, so there's nothing, I would argue that there wasn't anything really striking, at least in the Middle East, that I was like, oh, I wish I had it here. But I am still fascinated by the Alipay. I think just how fast and how easy it is. But also, one of the things that I found that was really remarkable about it is that there is actually a level of trust that's required there, where it's like you're a shop owner and you have a QR code, right? How do you know that the other person is actually paying you the amount that you ask them to pay? I mean, I'm sure there's really good ways of doing that, but I thought that it was really interesting in that part of the world, they actually do trust that this is going to work and that people are not going to jerk them around, right? And so I found that to be really fascinating. And I think, at least in the US, we have Venmo, we have PayPal, we've got Cash App that lets us move money around between us pretty easily. But I do feel like the QR payments thing is pretty awesome, and how ubiquitous it was. And just everywhere you go, you literally can pay for anything just by taking a picture of that QR code. It's so cool.
Yeah, I often, if I tell people I work in fintech, they suggest to me that I build Alipay. And I'm like, I appreciate the suggestion. They're like, it's this really great product. And I'm like, it's also state sponsored, and there's a lot of reasons why it's hard to build in the United States. But there's a lot of enthusiasm there for sure.
But I mean, also I would argue, I think both, all the card networks have actually done such a great job at building out the infrastructure, right? I mean, like just about any merchant out there has to have some form of like card acceptance, right? And so I think it's a really great rail, and it's available to anybody, really.
I was gonna say, and it's highly reliable and it's super fast. There's a lot to be said for that.
Absolutely.
All right, last question from the crowd. Bashi asked if there's an area of regulation that, if changed, would have a similar impact to Dodd-Frank. And I actually want to do a follow-up question to that, which is, do you think Dodd-Frank was good? Do you think it helped consumers?
No, I don't think it helped consumers at all, because prices have come down. So it really just, it actually, I feel like it actually did a disservice, because number one, it gave birth to all these bank fees, right? But also, Maya, it enabled the likes of Chime and Varo and Branch to come about, because we're actually able to not charge these fees. And like, it's the whole different type of consumer experience that we're able to provide, right? Versus the legacy banks. So in one way, yes, I think for entrepreneurs, it's actually created a great opportunity. For consumers, though, like, I actually don't think it made any help.
Wow. All right. Well, it is exciting to enable this wave of fintech startups, including Branch and including Chime. Ahmed, if people want to reach out to you or learn more about what you're up to at Branch, where should they go?
So I'm hoping that I can stick around with the book club. So hopefully try to pop in. And obviously I made the recommendation for the next book, so I have to kind of like be in there. But the other thing is I am on Twitter. I'm learning to be more active in Twitter, thanks to Maya. So thank you. So my handle is Siddiqui Ahmed, one word. So please add me on Twitter, DM me, whatever. Like, would love to chat. I love kind of geeking out on this stuff as well. Like, again, even on, I think Discord is such a great, like, how you've set it up is awesome. So I've been able to kind of like chime in there as well. So, yeah, I very much enjoyed this experience, and I just want to thank everybody here for, willing to read the book and share their thoughts. I really appreciate it. And by the way, I have to say this, in publishing, the reviews matter a lot on Amazon. So if you wouldn't mind, if you take a minute, please do a little review on Amazon for me, please.
Hey, that's great to hear. Yeah, like we will mobilize. We will all go to Amazon and write a review. Is that the best place? Is it Goodreads?
Yeah, they have Goodreads and all too. I mean, whatever your preference is, but I feel like Amazon still is kind of the main go-to for all of this.
Awesome. Well, I'll make sure to send people your way over email as well. And then, yeah, I appreciate, right, we can all hang out in the Discord in Fintech Book Club and keep the discussion going.
Yeah. Again, thank you, Maya, for putting that together. It's pretty awesome, and super excited to be part of it. I'm hoping we can bring more and more folks into that fintech fold through that. So thank you.
That's the plan. All right. Thanks for your time.
All right. Thanks, everybody. Have a good night.